What is going on YouTube? Hit it back making another brand new Crypto TV episode. In today's video, we are going to be looking at XRP, Ethereum, Bitcoin, as well as the S&P 500. Specifically, we're going to be talking about the stock market a little bit longer than cryptocurrency, and that is just a disclaimer for the beginning of today's video. However, we are going to most definitely talk about XRP and the cryptos because there are some interesting patterns that have developed here and some breakdowns to the downside that we were expecting to happen here. And the pump fake, the bull trap that we saw XRP just perform, we also need to go in depth about. But I do want to talk about the S&P. If you didn't catch yesterday's video, I highly suggest that you do. Yesterday, I made a video, and I just want to show you which one exactly. But I made a video yesterday, and we went very much so in depth about the way the stock market, the overall economy was going to kind of perform. And that's kind of what we, what we're going to kind of touch upon today. Just clarify a few lines on the graph. I had a few people comment in regards to the purple lines that were drawn on the charts here, and I just want to answer those questions today. Now, I'm pretty sure he's referencing the S&P because that's what I spent most of the time with, this purple one right here. Although I'm not entirely sure what exactly it is. We do have some drawn on Bitcoin and Ethereum and even XRP, although I'm not sure that that's what he's referencing. But regardless, we'll cover them quickly here, but definitely make sure to catch this video if you haven't already, because it is important, and I do think it answers a lot of questions here. But moving forward, we are going to be looking at XRP, which, as you guys can see, is starting to correct downwards. We had this very interesting price break that actually started to break us to the upside, and I said do not trust it in the slightest bit because it is a complete hoax. It is a complete bull trap. Even though we broke bullish, which was surprising here, we had the symmetrical triangle. I expected to at least fill in the gap like this, or to break down from this and fall to here or down to here. I was not expecting a reversal to the upside, but even though we did, and we did get stopped out on Patreon, I still am a strong believer that this is not confirming a break up, and we are going to continue to slide lower and lower and lower. And that can be confirmed in a few ways, and I'll show you guys that in a minute here. But Ethereum has officially confirmed breaking down as expected and anticipated. We have this beautiful 3-hour ascending fractal here, filling in the gap. Ascending triangle broke bearish as expected. Bitcoin as well, you could see had an ascending triangle here, which we were tracking, and this also broke bearish. If I bring you back to yesterday's video, you can see on the graph here, that's what we were kind of talking about too. We were talking about XRP exploding, but it's not what you think. I just want to touch upon that. You can see XRP just exploded, but it's not what you think. S&P, massive bull market coming. That's what I was referencing in the future, long term. But short term, we have some corrections to the downside. But this run that we had, we spoke about. Now what you think in regards to a flash to the downside, that's what we're starting to see here. But we are going to be going in depth about all these cryptocurrencies, so definitely stay tuned, including the S&P, and we'll talk about this purple line if that's what you're referencing. But regardless, that's it. Definitely make sure to smash the like button, turn on post notifications, subscribe. Let's dive into today's episode. So first and foremost, what we need to talk about is the coin market cap, down about 1.58%. The correction is starting as expected here, nothing unsurprising. We've been kind of free floating sideways for a very long time here. Bitcoin floating sideways, Ethereum floating sideways, BNB sideways, XRP. This is a very weird jump. You can see Doge and a lot of these cryptocurrencies have, for the most part, been kind of stagnant and trading to the, trading with uncertainty sideways motions there. And we've finally started to correct downwards, and I think this is going to trigger a correction to the downside here. Now, XRP specifically, I've mentioned this yesterday, and I'm going to go in depth about this again here. We had a beautiful ascending fractal forming here. This typically has a bearish bias. By some stroke of luck, it managed to break to the upside here, which I was shocked about. But I said, do not, or I am not specifically buying into this. I expect this to be a bull trap, which means if you buy in thinking we're going to break, it's not going to happen, and there's a very, very, very high possibility and likelihood that we are going to correct to the downside. And the reason I confirmed this was because if we check and we scale ourselves back out, if you look at the daily here, you'll notice a very interesting pattern. This is not the first time we've closed the daily outside our purple trend, and if that's what you're referencing, this purple downtrend, this could be another example. But you can see here consistently for the length of time, this is the downtrend on a descending triangle on XRP. We've had numerous resistances. It's happened back here in April of 2021. All of 2021, we had it in May, and then we had it in September of 2021, and then in November, consistently. This is consistent trends breaking above the resistance, and every single time we either retest it or close the daily above it here, we break below. You know, again, had you have bought in thinking right here that this was going to be a long position, you would have bought in here because we closed above this major purple downtrend. That was a terrible line, but hopefully you understand. This purple downtrend here, you would have bought in, you would have gotten screwed. You would have bought in on a long and immediately been rejected here if you didn't have a stop loss. So we've, tweaked our position and said, if you want to play it conservatively, we have to look at the weekly charts. As you guys can see it again, we closed above here, but this doesn't mean we're out of the woodwork just yet. Also consider the resistance that it's retesting, the price ceiling that it is hitting is a very, very strong and unfriendly reminder that this is not to be messed with. You can see back in the past here, we've had many attempts of trying to break through this, many, many, many attempts, and it does not happen. So the fact that we're hitting that again is simply put difficult to break through. In order for us to conservatively buy in with the least amount of risk, we have to look at this, and you can see here a better overview that this is a descending triangle. If this is the purple band you've referenced, this is it here. Now, we've been filling in this gap since early or mid 2021 here, and you can see consistently, let me make this a little smaller here and then this a little smaller here. You can see consistently we have caused wicks, which means intra-week trading. We have closed above it on the daily, but we have not actually closed a weekly above it at any point. We've retested it, but we've never actually closed above it. We've had lots of wicks and lots of retests, but never closed above. And you can see again, zooming in, this is about 4 days and 11 hours. And you can already see with this momentum, it's already wicked down below it. Will this stop? Jeez. You can see we've already wicked down below it here after getting rejected off of here, and it's happened consistently. So what we're looking for is we have 4 days and 11 hours left. If we close above here, close at 39 cents. That's it. All we need to do is close at 39 cents outside this downtrend here. And that would be enough for me to buy in with expectations of a recovery to 80 cents. But unfortunately, until that happens here, until we can close a weekly candle above this, it has continued to correct to the downside, and I think we're going to see 30 cents before we see 80. That's just my 2 cents here. But otherwise, that's my opinion on that. We are starting to see the markets correct because, yeah, XRP looked bullish for that split second that it broke to the upside here. But every other crypto screamed bearish movement and bearish momentum. Now, obviously, we do all these trades on BitYard, the #1 cryptocurrency leveraging exchange that I like to use here on the channel. You can buy long, you can sell short, you can leverage trade, you can trade XRP, which not many exchanges offer here. You can create stop losses, short, take profits. They even offer a demo account, which allows you to trade around with 100K of Monopoly money to test your skills before actually putting real crypto in, which is awesome. It's a great way to just play around, as a simulation. And the best part is if you sign up with the link in the description and click mystery box, you can earn free crypto completely free, and it's completely free to sign up. So make sure to check it out. Now, with that being said, that pretty much covers XRP. The correction we're starting to see now was not surprising in the slightest bit. Ethereum is also starting to break bearish here as expected. This is typically what I expect to see happen. We have a major drop, it forms an ascending fractal, and then a bearish drop to the downside. That's what I'm expecting to see happen here. It didn't do that, which was very confusing, but we are continuing to drop lower. It's expected, anticipated. I feel like this is going to continue to drop here. We're only at about 43 in the RSI, so I do believe we are headed for 1,040 before we see a break to the upside here. I believe we are going to fall lower before we go higher, and the same thing applies itself with Bitcoin. Bitcoin as well is breaking bearish. I think we're going to see 15.5 before we see 20,000, and that's my 2 cents here. I think we're going to be breaking bearish before we see a bullish run. You can see major price ceiling here. We are rejecting, and we're probably going to break off that and fall down to 15.5 very quickly. And at the same time, the S&P is going to drop, and we are going to pull all the way down to probably 35. Now, if the S&P is what you were referencing into what is this purple trend here, what does that mean? Well, let me explain. So if I jump to the daily here, you'll get a better view. And I just want to kind of give you kind of how these markets work and how my 2 cents is. So for the length of time here, you can see, I just want to go piece by piece. So we had, this was the housing market crisis here, right here. This is when we were creating and pumping out subprime mortgages for people that could not afford it. If you asked a stripper if they had a, even strippers like had mortgages, nothing wrong with the field, whatever, but I'm saying you could ask them and they would say, yeah, I have 7 properties with 7 mortgages all at once. That's a sign to get out of the market because they all don't need mortgages, nor should they be able to get 7 leveraged for rental properties all at once. That is a lot of risk for somebody that does not have the cash to be balancing out over $1 million in debt. It just doesn't make sense. Well, that eventually caught on, and they called the loans and all this other crazy stuff, and that caused this major dump. Well, since then, we've now formed this beautiful trend to the upside here, this ascending fractal. Very interesting. Now, the government, I believe, caused this to happen here. They started putting implications causing this to drop. This doesn't just randomly happen. There's more thought that goes into this, especially because everything, all the, government, a lot of the government's money is backed into the stock market too. It's very interesting. But we saw this correction here. Keep in mind, we were also extremely overbought on the weekly charts here at this period. So it also made sense that we would start to see a correction, maybe not to this low, but a correction nonetheless because we were overbought. Well, we started this new trend in 09 here, starting to recover, and we've started to swing to the upside here. And since then, we've spent many, many, many years of trending inside this white ascending fractal here. For example, it has been a total of 4,326 days of trading inside this ascending white fractal here. And every time, you can typically see when we hit the top resistance, we don't have to crash like this when we're overbought, but we do scale lower and continue the movement, if not trade sideways. It's very possible here. But you can see this causes all the trends. If you look up the date for the correction that brought us from 15 to 16 here, you'll notice the Feds have raised interest rates, the federal fund rate has gone up, and there's some very interesting news. Same thing in here, 2018. What we saw during 2018 was the China tariffs here causing the correction. We also had interest rates move up, which is also another reason. Typically that spikes the downtrend and the correction here. Flash forward again. We have the pandemic. Well, coincidentally, the pandemic didn't have, and this is what's interesting with the way these markets work. We had this major swing to the downside with the Feds dumping money, and we had this virus, and they locked down the economy. They closed everything, and nobody could spend money, and that caused the major market to dump and correct to the downside. But tell me why. Somebody needs to prove to me and tell me, why does this happen here and not here? I don't know. I mean, or trading in the middle. Why doesn't it happen when we're trading at 50 on the relative strength indicator on the weekly? Why does it have to happen when we're overbought on the weekly? That's what I don't understand. I can understand why it wouldn't happen when we're oversold, but why not trading like neutral? Why not flatlined out and then seeing a correction? Whatever the reason is, we've been trading inside of this, and even the drop that we had pulled us all the way down to the bottom support here. We didn't fall lower. We fell down to support. That's when they said, oh crap, excuse the French, we've fallen way too low. Time to print inflation, time to print money, time to print dollars and cause inflation, because we don't want this to drop any farther out than this trend that we've been in literally since 2009. Then we start to rally up. Now, what's interesting is they should have stopped the printing of money right here. This is when they should have stopped the printing of money, but they didn't in 2020. This is when they really started to ramp up the inflation. This is when they really started to pump it and turn it up a notch and really dump all of it. Basically, skewing inflation higher and pumping it to the upside here. And then what was caused, all of this, is what I think is total, complete manipulation, something we haven't trended outside of in 11 years, 13 years. We have not been outside of this in 13 years. And, coincidentally, now we have. So this was all manipulated money that shouldn't have been printed. All of this money here that was added to the markets here was printed within the year. This is all added in. Well, guess what they're doing now? They're sucking the money out, and this is causing this drop. Coincidentally, right at this point right here, this candle right here that started the downtrend was the date when the Fed started to raise interest rates. You can Google it and fact check me, and that's what's caused this. So I've drawn a descending fractal since then, which has caused the correction to happen here. I've drawn a beautiful descending fractal. Why does this happen? That has been predicting the drop and the support. And you can see that consistently here, that every single time we've been continuously laying out more interest rates, and we've continuously corrected. Well, for the fifth time, you can see the fourth time, we've retested this resistance, and it was expected and anticipated that we would reject very nicely off this and correct to the downside here. How low, I'm not sure. The goal is we haven't had anything absolutely insane that would cause us to break through it, nor do I want that to happen here. We're not shutting down the market, and we're not shutting down the economy to see something like this. So my hope is that we just consistently correct here. Maybe we go down to here. Hopefully not, though. But if we did, this would be prime time buying season. We would be extremely oversold on the weekly here. But hopefully the lowest point we move down to is here, and that's it. You know, we'll definitely hit 37. Hopefully that we just hit here and that's the bottom, and then we'll go from there. But hopefully we can continue to trend inside this, you know, ascending fractal here instead of breaking bearish. That's the goal, is we can continue to scale like we've been doing here. Now that the government is trying to cancel out what they caused right here, which they are doing clearly right here. They have now pulled us and pushed us back inside of the natural flow of the markets here. We are kind of high, though, which is the scary part. So do I think they're going to cause a major correction like they did in the past here right now? It's possible. They're going to really screw everybody, and the markets are going to be absolutely devastated, which is why I don't think that can happen here. I think what they're shooting for is more of a soft landing, and what I mean by that is a soft landing like this, maybe to here, although I don't think that's going to happen, but maybe a soft landing like this, and then we move up. That's the goal. This would be fine, because this little movement here brings us into the year 2025. And all we did was kind of horseshoe up. We kind of, you know, had a soft landing here, and now we're starting to pump up. This would be a soft landing and would take 2 years from today. 2 years, or 1 year, this would all happen. And that would be conservative, and there'd be nothing wrong with that. But if we do this, that would be terrible. But I don't think that's going to happen. The last time that happened here was caused by a major thing happen. So unless we go to war, I don't see this happening here. Unless we go to war, I don't see that happening. But soon we'll probably hear positive news with, you know, what's going to happen is we'll start to swing lower. We're going to see interest rates raise in, you know, January, March, April, 3 times, or maybe January, March, and then May, and then June, they'll say we're keeping it the same. And then from June to the end of the year, December, they're not going to raise interest rates. And then 2025, they'll start to, cool off interest rates and lower them. So we'll probably see something like this. Because by the time we get down to here, this could easily be August of 2023. January, February, March, April, May, June, July, August. That's a long time. I'm saying June. Let's say they stop raising rates in May. May is right here. So we could easily do something like this. Or we could easily do something like this. I don't know. And that's May already, and July, actually. Then they're going to cool off the rates, and they're going to say, the feds are no longer raising the rates, so we're going to start to see movement like this. And then we're going to get, there's no more war with Ukraine, and there's no more this, and there's no more that. And inflation is going down, and then this is what's going to happen moving forward. This is how I expect the markets to move. So by the year 2025, you'll most likely recoup your losses had you invested in this out of inflation range. Because notice here, and then I'll wrap things up with this video because I know it's going long. Notice here that when we're at this level right here at 4,300 points is overinflated here. When we're over here, we're overbought. When we're over here, we're overbought and we're overextended. But when we're here, it's neutral. We're normal. We're actually trading almost in the middle of the charts here. So it's possible to get to these prices here, but we did it too quickly. So we need a natural curve like we're seeing here. This is unreasonable, but literally at the same price point, a year later, or a year and a half later, it's neutral. So that's what I'm waiting for. So as long as you can wait out till this point, we'll be okay had you invested here. But that's it for today's video. Sorry for it going longer. Make sure to smash the like button, turn on post notifications, subscribe, and I'll see you in tomorrow's video. Peace.